So we want to hear. So let me go to my Facebook on my phone. And all right, we are live, Facebook. Oh, you can hear me. So we are live, I have my loan officer, Raisa, on the line, on the Zoom or whatever. I'm tired, y'all. I was at the gym at 4 a.m. this morning, and then I went and did mock interviews at Women's Empowerment, and now I'm at the real estate office. But I wanted to get this important information out to you guys because it's been on the news, it's been all over Facebook, and I had to hit my loan officer up and be like, girl, what is going on? You know what I mean? So let me let you know who she is first, all right? So Reyes, can you let people know how long you've been in the business, who you're with, and any other good nuggets about you before we get
Well,
this in?
of course, of course. So I am a branch manager. I've been in the industry for quite some time. And with Clear Mortgage Capital, I'm a broker. So which means that I currently work with over 100 different lenders. I have all sorts of products, you name it, I got it. So yeah, I've been doing this for quite some
Okay.
time.
All
Yeah.
right. All right, cool. And thank you for always sharing my posts. I see it. Thank you. I
Yeah.
appreciate you and
Oh,
stuff. So,
absolutely. Are you
yeah.
kidding me? I'm always here to support. I love supporting other people. We're all doing our thing, so it's all good.
Yeah. And we known each other for how long?
Oh my goodness, since 2017.
Ooh, man.
2017 or 2018. Yeah, that's when
And,
I was in the Thomas. Yeah.
and we both was only 16. So,
Yes. I like that.
all right. Let's get down to it regarding on Facebook, when I logged in the other day, and I've been seeing it off and on, and all some new changes. Can you explain what the Fannie Mae just removed the minimum credit score requirement? What is that about?
620. Okay, so it used to be that with Fannie Mae you would not be able to qualify for conventional. So people know what who Fannie Mae is. If we're talking about Fannie Mae and Freddie Mac, we're talking about conventional loans. So it used to be with Fannie Mae on conventional loans, your minimum FICO score requirement was 620. But I don't know if anybody has ever used a conventional product with a credit score of 620 because Fannie Mae can lower and get rid of the minimum FICO score all they want, but it's up to the lenders how they want to handle it as well. So every lender, every bank is going to have their own overlays. And
Oh,
so right now you have FHA FICO scores that can go lower than 580, 560, but requirements change with that. Same
mm,
thing with 620. If you're getting rid of minimum FICO score, so how are they going to look at people's ability to pay? Are you serious buyer? If you have a FICO score that is below 620, okay, are you going to be paying back the mortgage? Are we going back to 2008? So sometimes there are hardships that we need to look into, right? There are people that go through divorce that it was out of their control that their credit has sometimes people go through divorce if they're on the same credit line, then one party stops making the payments, so it affects the other one. And lenders are going to start looking at overall picture. Let's say if you're paying your rent on time, if you're paying your utilities on time, have you had a good stable job? So they're going to make the decision of giving you the mortgage based on other criteria, not just the FICO score. So
but I thought that always was the case. So they look at the whole picture.
no, so when we always do, but not we don't ask for if we're pulling a credit score, right? I'm not
Mhm.
asking you to prove that you pay your utilities on time because
Oh, I
your
see what
FICO
you're saying.
score is already
Mm,
showing how
mm,
responsible you are. So I don't need to see that. But if your FICO score is showing one picture, but really, life events happen. It's
mhm,
sometimes people, with the California fires, a lot of people were misplaced and fell behind on their credit cards. So it doesn't mean that they're bad and irresponsible people. It's just life events happened. But just to let you guys know, with this requirements changing, loans are risk-based, right? So we're going to look at the risks. How responsible are you? How long have you been on your job? And we usually run desktop underwriting to know, the criteria. So what will the lender want, or what does the investor want? So we're going to ask you for the documentations based on the desktop underwriting. So if your FICO score is low, usually with the with Fannie and Freddie, you can go up to 50 loan to or debt to income ratio, minimum 5% down payment, or 3%. No reserves most of the time. You don't need to have any reserves in your accounts. With a lower FICO scores, those factors will start changing. Sometimes they will want higher down payment. Even if you don't, even if Fannie Mae comes back and says, and I'm saying that this could happen with lenders, right? The banks will say, okay, we'll follow that rule and that guideline since it's there, but we're going to want higher down payment, probably some money in the reserves. And now your debt to income ratio cannot be at 50. We want it to be at 45, maybe 43. And I feel like this is going to be a manual underwrite. It's not going to be desktop underwrite. It's likely we're not going to push it through the system and say, yay, we're good to go. It's going to have to go to the underwriter who's going to manually underwrite the file.
wow. Okay, so you guys hear that, even though they're saying that Fannie Mae just removed the minimum credit score requirement, lenders and banks have their own rules. Okay, so
Mm-hmm.
they're going to be looking, they're going to be asked, it sounds like they're going to be asking a lot more questions. So y'all get ready. You're going to have to prove that you pay your rent on time, utilities on time, everything, So
Yeah.
they don't want it, like she said, they don't want to go back to 2007, 2008, all the foreclosures. They still want to make sure that you can pay. All right. So, I wouldn't be surprised as some of, already people are being qualified for lower amount. You may even get qualified for a much lower amount now with this
Mm-hmm.
rule. So
Yeah.
just want to let you guys know. Now,
Just to say, Alita, if you have a client, or if we have a buyer that has a credit score, let's say lower than 680, I usually typically send two different options to the client: conventional and FHA. Most of the time, FHA will be better pricing, better terms, better rate than conventional would be with the lower FICO scores. So yeah, 620, but 620, I've closed only one loan below 670, and the client came in with 40% down payment. There's
wow.
no point for us to go FHA, so we did conventional at that point.
Mhm.
So just to say that not every time, if that one product or conventional is offering lower FICO scores, it doesn't really mean that's the best product for you. There are FHA as well that could possibly meet your needs a lot better, and it's cheaper.
And a lot of people get FHA confused. Now, a lot of people are like, oh, I want first time home buyer, think it's FHA. FHA, you can actually buy two or three homes. You know what I mean? So
Depending on the distance, yeah. Hmm.
yeah, depend on the distance, but FHA is not only first time home buyers. Okay. You can
No,
already
yes.
own a
Hmm.
home before. So
Hmm.
then the next one I see is regulators are exploring assumable and portable mortgages. What is that?
Assumable mortgage is your FHA loans. So if you have Govy loans, it's your FHA, VA, and USDA. Let's say you own a house that you want to sell it, but your current mortgage is FHA on that house, right? So you bought it several years ago. Your interest rate is 3%. So I, as a buyer, want to assume your loan and
Hmm.
continue with that lower payment. But listen, sometimes what people don't understand is that you will need to get another loan to cover the difference between the purchase price and or the loan amount and the sales price. And so that's going to be a home equity line of credit, or you have to bring in more down payment to meet the guidelines. Let's say meet the requirements. So let's say you're selling your home for $600,000. You have a loan on that house that is more assumable for $300,000. I want to assume your $300,000 loan, but I have to come up with a $300,000 difference. And the only way that I can come up with that difference is either cash or get a second loan that covers it. Sometimes those second loans are higher in interest rate. So for me, depending on the difference in the payments, unless you're coming with the, sometimes it's just better to get a new FHA loan than assume something and then pay extra interest rate on a larger amount of the second loan.
And I heard they can take, when you do the assumable, I heard it takes a long time because,
Yes,
so say if you got qualified with Raisa, but you want to assume the loan on a property that you put an offer in, that knocks her out of the game. Then
yes,
you're dealing with the seller's bank only. So,
yes, yes.
yes,
And
so then you
usually,
got to get all that over.
yes, I've seen some assumable loans go up to 90 days.
Mm.
So it has to do, and it's so fun. My fiance helps his clients if they want to assume the loan. He packages the loan and gives it to them. So when they submit it with the seller's lender, they have the full package. They know
Oh,
he
good.
just gives them this full package. So when
Mm.
they submit it, he's like, I want you to, it's like one and done. So because every time they come back and ask you for additional documents, it's going to take 3 to 4 weeks for them to go back and revisit the file and review what you have submitted. So that's why it takes much longer.
And also remember, like she said, you got to come up with the difference too. It's
Hmm.
not just the regular 3 and 5%. You got to come up with the difference from the purchase price and what they owe.
Hmm.
So, all right. So the next one is there's even discussion about extending loans up to 50 years. I saw that on the news last night, and real, and realtors and loan officers are against it
I'm not. I'm not. And
because it's
here's
gonna
why.
lower their payment.
It's not only that, Alita, but I did a post about this on my social media about, 30-year loan became available to everybody in 1954. It was not popular until 1960. So it wasn't that long ago that we started using 30-year loan, right? So right now, 70% of the loans, 70 to 90% of the loans are 30-year loans. So if nobody can qualify for 20, 15 years. So it's 30-year loan. So when people are talking about how much more interest you're going to pay for the 50-year, okay, let's stop and talk about that. Because all the loan officers that are against it and they're talking about how much you're going to overpay in interest rate, they're standing there and selling home equity line of credits, HELOCs, HELOANs. Well, that's extending their loan for another 10, 15, 20 years, the existing loan. So that's 30 years to another 20 years, that's 50 years. So you just had them extend their loan for another 20 years. So that's the same thing. It's just how can you be pro for HELOC and HELOANs, but against the 50-year? I think a lot of people will qualify. And I always go back to when my parents were buying their homes, right?
Mhm.
Okay, so in 1993, my parents bought their first home. Alita, it was $89,000. The payment was $470 a month.
Mm.
Okay, so then they bought in 1997, they bought a different home with a payment of over $1,000 a month.
Mm-hmm.
Everybody thought they were crazy. Brand new home, payment over $1,000. That was too much, right? That was only in 1997, and everybody thought it was too much. The 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 dollar, the value of dollar changes. So $1,000 that was too much 10 years ago could be a lot more affordable. So I'll start making more payments towards my mortgage, and I will pay it off earlier than 50 years if I wanted to. But
Mm-hmm.
some people don't care about that. Some people want to save the money for for their kids, or to travel, or to live, for crying out loud. A lot of people are living paycheck to paycheck.
Mm-hmm. I was excited because I was like, yeah, you're right. More people are going to qualify. We can put more
Mhm.
people in housing because that's the issue right now with the debt to ratio. This will lower the debt to ratio with the
Mhm.
50-year loan and stuff. Now, let me ask you this. So between the 30 and the 50-year, so say if their payment is 4,000 out of 30,
Mhm.
will it be a big difference with the 50?
Well, 20-year difference is a lot. So
Okay.
that's going to be a very big difference in the payments. I can't say a huge difference. I haven't done the math as far as I can't tell
Mhm.
you for, let's say, $400,000 purchase price. And this is what the other thing that people don't understand, is that a lot of people can't even afford their first home. Just for them, it's like, instead of just moving, like, I have clients that have moved every other year because the rent is up, the landlord doesn't want to extend the rent, they want to put it back on, sell it, so they're moving. Imagine having, yes, it's a 50-year loan, but imagine having that stability for you and for your children, to have
Yeah.
the children in same school, graduate with their classmates, and being in the same house. A lot of people, they move every 7 to 10 years. If this payment became very more much affordable, like I said, dollars, the value of dollar changes. So let's say if now I can afford more, I'm going to buy a bigger home. A lot of people do that. They're like, okay, now I can afford a little bit more, so I'm going to sell this and get a better house, bigger house. And so people are changing for better. They want to up there. So if you're talking about how much more money they're paying for 50 years, like, yeah, well, people are going to do what they want to do.
Mhm. Right, right. Yeah, that is so true. Wow. I and when is all this supposed to take place?
So the 50-year is actually, it's in, they're still talking about it. That was just the conversation that I think everybody fell in love with. I think Congress loved it, and that's why it started surfacing. But as far as the FICO score change, it's going to happen. I believe it's November 16th. I think it's on Monday. I
Oh,
think so.
wow.
Yeah, yeah, it's changing here very soon, next week.
Wow. So people who's already qualified with you guys are just kind of, is there any going to be any big difference you guys have to do for, okay.
No,
Okay.
if I have clients that are qualified for FHA, I know FHA for the lower FICO score is going to be much better. It's cheaper, it's
Hmm.
safer than it would be for conventional. I mean, I would say somebody that's coming in, and a lot of people, the misconception about FHA is that, if you buy with FHA, then you have to pay mortgage insurance for the life of the loan. People forget that if you bring more than, let's say, 10% down payment, all you have to do is pay for 10 years, and that mortgage insurance is going to go away on FHA. A lot of
That's right.
people don't talk about that. They
Hmm.
think if you go FHA, that mortgage insurance is going to be for the life of the loan, which is not true.
Wow. So how can people get in touch? Thank you so much for taking the time to clear this. We're going to have to do another one on another topic. How can
Yeah.
people reach you?
Call me. still have my Oregon phone number, so feel free to call me on my that's the number that I usually answer. So it's 503-753-0664. Find me on Facebook. Reach out to me on Facebook, message me. I'll be happy to get in touch.
Okay. And then those that do reach out because of this, podcast or Facebook
Mhm.
Live, whatever you want to call it, I will have I will offer you something, depends on how much you get qualified for, but I would throw in a little something too. So just depend on how much you get qualified for.
You
But
get a great team right here.
yes, yes, yes. So, all right, all right. So anything else we missed or anything that you want
I
to throw
think
out there?
we covered all the big news that has been surfacing for the last couple of weeks, so this is good.
Okay. Well, let me know if there's any time else that we need to jump on here.
Oh yeah, people, if they want to talk about any other subjects, if they have any questions that they want us to talk about, let us
Yeah,
know,
put it in the
comment.
chat. Yeah,
Yeah,
even if you're watching the replay on this, put it in the chat because I know so many people with these high rents and everything, people are
mhm.
trying to buy. And I'm kind of really excited. You said the women, the 50-year is coming, it's still
We
in
don't
talks.
know yet. Yes,
It's
we
still
don't
in
know
talks.
yet.
Yeah,
Yes.
because I think when that drops, it's going to be like the low interest rates. I think
Yeah.
everybody, you know what I mean?
Hmm.
So that's going to be. So, well, one more question. Can people refinance to 50-year?
Yes, they can.
Oh,
Yes,
see,
they can. If they want to lower their monthly payments, they certainly can. I think that would be an option because a lot of people are refinancing from 20 to 30 or 15 to 20. So if you want to refinance and lower your monthly payments, it's up to a person's each person has their own story, right? I can't say that, oh, don't do that. If it makes sense for you, or if you want to refinance from 50, let's say you're going through hardship right now, your income is not as good. You get into 50-year loan and then refinance it the 30-year, 20-year, or 15-year. For as long as I've been doing this, I don't think I've ever seen anybody refinance from 30 to 20, even if they've had their homes for uh, you know 10, 15, 20 years. They're refinancing to 30 years. It's something that people are comfortable with. It's just the lower monthly payments.
do you think the 50-year is going to be a much higher interest rate?
It will, because I don't know how much more, because if you look at the interest rates between 15, 20, 25, and 30, there is a difference in the interest rate between 15 and 30, 20 and 30. Of course, 30 is going to be a little bit higher.
Okay,
Yeah.
all right. And tell the people once again your name and the company you're with.
I'm Raisa Food. I'm with Clear Mortgage Capital.
And I'm Alita Turner with Remax Dream Homes. All right. So thank you, lady, and I will be in touch with you soon.
All
Okay.
right. Looking
All
forward
right.
to it. Talk to you
All
soon.
right. Bye bye. Bye, everyone.